Alright guys, let's get started. You're watching Crypto Corner, your crypto radar for all the latest news, reviews, market analysis and tutorials that help you master the crypto markets. And the crypto markets are actually still looking alright. I mean, Bitcoin is at 17,000. This is a resistance for Bitcoin, and I'm expecting a pullback from here because we've been challenging this level for a couple of days now. And so far, we are failing to really go heavily above it. We are touching it, we are going above it very briefly, and then we're dropping again. So far, it seems that there is a lot of selling pressure at this level, and the buyers, at least for the moment, the buyers are not taking advantage yet. So Ethereum is also doing well. It's almost $1,300 to 1,290 as we speak, again approaching a strong resistance. And BNB has been around 290 to 300 for the last few days now. So definitely a correction on the markets is something that I'm personally expecting. I will be doing some technical analysis short videos, so YouTube Shorts, TikTok, Twitter, anywhere you're following me, you will be able to catch my short videos. These are usually 60 seconds when I'm literally just showing you what I'm expecting for the price action over the next few days. Anyways, let's talk about Cardano, because on Thursday, crypto analytics firm Sentiment, which provides tools for on-chain social and financial analysis, pointed out an interesting fact that might not come as a surprise to Cardano fans but could seem quite outlandish to other people in the crypto space. They posted this tweet where they say that according to data from GitHub, Cardano is head and shoulders above all other crypto assets on development activity. This is how they put it in this tweet, supported by a link to their detailed analysis. This is not the first time we are seeing Cardano outperform the competition. This year alone, I've reported about Cardano on-chain activity, wallets, and overall development all hitting all-time high levels. So even in the bear market, Cardano is performing really well. I'm not talking about the token ADA though. Its value has depreciated just like the rest of the altcoins. It is currently sitting at negative 89% from its all-time high of $3.10. But this is not diminishing the fact that the Cardano network is having loads of upgrades and new development, and it's growing its ecosystem and prepares it for new highs once the market turns positive. Last Friday, 25th of November, IO Global, the blockchain technology firm responsible for the development of Cardano, reported that there were 1,146 projects powered by Cardano right now. At the time of that report, actually, there were 106 projects launched already on Cardano, 1,146 building on Cardano as of right now, 6.9 million tokens, and 3,759 Plotus scripts. This is great news for the long-term ADA holders. I don't hold any at the moment. I exited my altcoin positions long time ago, as you know, and until I see a trend reversal, I'm not really jumping in. I do some short-term scalping though, mainly with BNB, Matic and Ether, and of course Bitcoin, but I'm not yet investing, so to speak. It's all short-term right now for me, all the way until I see the signs of a trend reversal, and for the time being, we are in a downtrend still. That hasn't changed. But it is important to keep an eye on these projects that are actually doing well during the bear market, because these are actually the stable projects that you can count on. And a bear market is a very good test for a crypto project. Many of them don't really come out of a bear market alive, or at least not strong. So let's see how Cardano will be actually coming out of this bear market. So far, everything points out towards a very good performance. Now, before I move on to the next topic, let me give a big shout out to our sponsors, and then we'll continue. One of our partners is BitGet, a crypto exchange I use a lot right now to trade with zero fees. Yes, you heard that right. Spot trading with zero fees, welcome bonuses and rewards for well over $4,000, and no KYC for up to 20 Bitcoin daily withdrawal. It was launched in late 2018, and it's one of the world's leading cryptocurrency exchanges with a core focus on social trading. They already amassed over 2 million active users in more than 50 countries around the world, and they have licenses in the US and Canada. They also offer step-by-step tutorials for novice traders and the very popular copy trading service, where you can follow experienced traders and copy their trades on autopilot if you're not very confident in your own trading skills. I dropped my invite link in the description below for you. Make sure that you use it to register and get the welcome bonus, as well as their affiliate program, through which you can earn more than $3,000 bonus. They pay you 30% commissions on every trade your friends make, so this can be an additional passive income stream. And that's not all. Aside from spot markets, BitGet also offers futures trading, a launchpad for newly listed IEOs, interest-bearing accounts to maximize profits on your crypto holdings, yield farming through their launch pool, and much more. They just announced a huge partnership with Messi on his last year of the World Cup. This is quite a big deal, not only for football or soccer fans around the world, but it also places them in the top crypto brands right now, making it a serious competitor amongst all of the crypto exchanges in the world. Yet another reason why I'm very proud to have them as a worthy partner of this channel and one of our top supporters, along with Ledger, Keystone, Token Metrics, and many other major crypto players who've been supporting our community throughout the years. Sign up today with the invite link in the description of this video. Alright, now on to the next topic. Following the collapse of FTX, investors, which everyone is still talking about, investors are now massively redeeming their stablecoin holdings for fiat in a very public display of mistrust in centralized exchange platforms. I mean, some exchanges like BitGet, Binance, Kraken, Bitpanda, and a few others, they posted their proof of reserves already and they increased their transparency when it comes to users' funds, but that's not yet the case for all of them. And users are quite correctly, I would add, being very cautious right now. According to CoinMarketCap data, Tether's USD Tether supply fell from over $67 billion in the last 2 weeks to $65 billion, so that's $2 billion drop. This means that investors have actually redeemed roughly $2 billion worth of USD Tether since FTX's implosion, with previous concerns about the USD Tether peg and whether the asset was fully backed. Many traders are redeeming their USD Tether or converting it to USDC, for instance. And Tether, which was originally issued as a stablecoin for Bitfinex exchange and then later on it grew into something much bigger, they insist that they had no material exposure to FTX. But this is not the first time that Tether volume drops after a major meltdown in the crypto market. If you remember, following the Terra Luna crash earlier this year, there was a redemption of more than $10 billion worth of USD Tether within the first 2 weeks. It's not just USD Tether though, the fear has also spread over to BUSD, the stablecoin by Binance, which has been on a high all year round. Recently, Binance delisted their competitor, USDC, the stablecoin by Circle and Coinbase, which at the time was seeing huge popularity. It still is, especially among those who don't believe in Tether. This way, BUSD became the main alternative to Tether on Binance, and this, coupled with the strength of Binance during these turbulent times, made BUSD even more popular and used. But according to CoinMarketCap data, its supply has fallen from over $23 billion to around $22.5 billion, losing $500 million, as people are still scared and they're really trying to cash out into fiat rather than stable coins. I mean, they're still holding huge stable coins stash, don't get me wrong, but what I'm saying is that more people are now alerted and afraid and worried about the possibility of one of these stable coins collapsing as well, and they don't really want to be risking it. So even though stable coins are still the biggest holdings in terms of a hedge against the dropping prices of crypto, many people are now turning directly to fiat. And I remember also crypto.com exchange recently swapped USDC for, or was it BUSD, one of their stable coins. I'm using it very sparingly. No, I don't really use it very much, but they swapped it for USD. Even though it's not exactly a USD that you can withdraw, but while trading on the platform, you're no longer using USDC, you're using just USD. So all in all, what I'm saying is that people are now turning more into fiat than stable coins. And overall, crypto investors have redeemed over $3 billion worth of stable coins in the last 2 weeks. And that is unprecedented. Well, one, because up until now there wasn't too much awareness about the risks, even though people like myself have been banging on the alarm bells about non-custodial wallets and exchanges being a high risk, but still, people seem to be nonchalant about that until the inevitable happened. And this amount is also so high compared to previous years simply because the market has grown a lot in the past 3 years. I don't think this will last for too long though. After a few months, and especially when markets begin a recovery, people will ease about the risks once again, and you will see that most traders will again leave their coins on exchanges for long periods until another hack or, God forbid, another platform collapses, and then we will talk about this again. It's always the case. And the last topic before I leave you, Coinbase is now disabling NFT trading on their wallet on Apple, on iPhones, I mean, because Apple's App Store terms and conditions are actually forcing them to do so. Well, this is the article here at Crypto News. Major crypto exchange, they say Coinbase, announced that users can no longer transfer non-fungible tokens using Coinbase Wallet, the iOS version. You might have noticed that you can't send NFTs on Coinbase, they say. This is because Apple blocked our last app release until we disabled this feature. Well, this is really unfortunate. This is again coming to that same 30% tax that Apple is having on all in-app purchases, something that Elon Musk was just complaining about on Twitter. Because when you're making any kind of purchase, even if it is in this case to do with cryptocurrencies, and you might be trading your, or even just moving your own NFTs from one wallet to another, right? So this is not even a purchase, but there is a gas fee involved. So as such, this is basically a transaction. And with Apple, everything, all kinds of transactions that are happening within an application that is on the App Store, it is bound to pay 30% tax fee. And it's very difficult to actually collect this tax fee from transactions that are including a gas fee, because these transactions, first of all, a lot of the times they're not necessarily purchases. As I just gave you an example, you could be moving an NFT from one wallet that belongs to you to another wallet that belongs to you. This is not a purchase. Yes, it is still a transaction. And because you're doing it with an app that is on your iPhone, Apple wants their 30% cut. And this is problematic. So we'll see how this will develop in the future. For the time being, Coinbase has disabled that function, so you cannot be moving NFTs from your Coinbase wallet on their iOS app, on their iPhone app. I'm not sure whether you can do it on Android, because I'm not really using Coinbase anymore. I stopped using it 4 years ago, perhaps, something like that. But Coinbase was the wallet that actually onboarded me in crypto and Bitcoin in particular. So I am still fond of them as a company. I feel that they do have a important space in the crypto universe, and I really don't want to see Coinbase go down. So I don't really hate on Coinbase, but I did stop using them because they're highly centralized and they're highly regulated to the point where they will provide users data to any government body that is requiring it. They did fight for that though. They did fight against it for a good year or so in 2017, and I think even throughout 2018 they had ongoing court cases and battles, legal challenges for this. They didn't really want to be providing that data because they knew the importance of self-custody and privacy and all of that. But as a centralized custodial, they are now required to provide data to regulators and to all kinds of government bodies that might be requiring that data. So unfortunately, they're not really the best player in the crypto space anymore. They're still big and they're still important, but for me, they're not really the best wallet. So I'm not using Coinbase. However, I know that many people do use them, especially people who are not very familiar with cryptocurrencies, who might just have a little bit of Bitcoin or a little bit of Ethereum, and they're keeping it for a rainy day. They might be keeping it there for 5 or 10 years, whatever their plan is. I know people like that. Personally, I have friends who are using Coinbase like that, and no matter how many times I try to make them move their coins into self-custodial wallets, they just find it too complicated. And I understand that it is much easier to be using a centralized platform, a non-custodial wallet like Coinbase, because you're logging in like with any other website, use username and password and everything, and it's just much easier for you to understand. The user experience of Coinbase and the user interface and everything just makes things much easier for people who are not very well versed into crypto, and I get that. Anyways, I will be following this story. We will see what happens. And now this actually begs the question, what is going to happen to non-custodial wallets like a Trust Wallet? Because with Trust Wallet, you're also transacting. And I'm not sure that Apple is actually getting a 30% cut from these fees that you're paying, when you're transacting with Trust Wallet. And Trust Wallet was the one that everyone was using right now with Binance especially. We saw that the Trust Wallet token jumped so much over the last month because people were moving their, stable coins or other crypto from exchanges. And for instance, with Binance, if you're moving your coins from Binance to Trust Wallet, because Binance owns Trust Wallet, it is considered a sort of a Binance to Binance transaction, so you're not paying fees, or in many cases, these fees will be refunded to you. So many people were actually moving their tokens and even BUSD and USD Tether and all of those stable coins, they were moving them into Trust Wallet. And these are a lot of transactions right now that are happening with Trust Wallet. And I'm worried if Apple decides that they need to be taking a cut from those fees as well. And if Trust Wallet is not complying, are we going to lose Trust Wallet as well? I mean, this is purely speculating on my part. I'm just asking a question. I'm not necessarily suggesting that we will. But I can see that happening at some point. I can see how this could happen at some point. We'll see. Anyways, thanks for staying until the end of the video, guys. This is everything for today. I don't really want to make it much longer. If you like the video, show your support, leave a like and a comment below. And also make sure that you check out the links in the description where I drop the links to all of the crypto services I'm personally using and I recommend to you as well. And while you're here, just pick another one of my videos and I'll see you in the next one.